and I wanted to tackle this Cadillac tax topic with you. It's been coming up more and more recently in the news, and it's because it was held off until the year 2020, and well, hey, that's 2 years away, so they're starting to discuss it more and more now. Most recently in the House Ways and Means Committee, where they actually suggested eliminating it completely. But let's get to what the Cadillac tax actually is. It is the ACA's high cost plan tax that is a 40% excise tax on the value of employer sponsored health insurance coverage that goes above $10,200 a year for individual coverage and above $27,500 a year for family coverage. And what it essentially does is it caps the exemption of employer-sponsored health insurance from income taxation. And it's really going to affect individuals that have HSAs the most because it's going to reduce those tax benefits of those accounts. Now, if you're not up on your IRS lingo, I did look this up just in case you're like, oh my gosh, what's an excise tax? I don't even know. So basically, an excise tax is a tax paid when you purchase a particular good. And it's an indirect tax in this case. And so with indirect taxes, the IRS levies the tax amount on the producer or the merchant, and then the producer or merchant passes that cost onto the consumer when they buy the product, because they basically attach that tax amount onto the price of the product. And that is why they are discussing this so much now and wondering if it really would be a good thing or not, because since these employer sponsored health insurance plans are going to get pretty much capped on the exemptions they can allow, they're going to have to pass on that cost somehow, some way to make up the money for it. And what the analysts and the experts are weary of is that since it's going to limit the tax benefits of HSAs, which HSAs are a product of high cost plans, hence the ACA's high cost plan tax, it's going to reduce the appeal of these types of plans. And another thing they're really concerned with is that this could result in employers offering more narrow plans, like as in more narrow offerings, more narrow networks, instead of offering more cost sharing as they have done over time. And another concern, and this is something that it was really interesting finding out, kind of reading the evolution of businesses and how they've been able to essentially change and get power over even our own healthcare, is that with the negotiating powers and how much it's affected the pricing of things, businesses over time have actually been able to drive up the cost of private health insurance because think about it, they're negotiating with health insurance carriers. And well, these health insurance carriers have to make that cost up somewhere, so they're going to charge their private market more to make up the negotiated prices with the companies, right? It makes sense when you think about it. So they're saying that if companies continue to have this, big negotiating power and kind of control over what they can offer their employees who are consumers, that the private health insurance market is going to continue to get even more unaffordable for the average Joe or the average consumer out there. So this is the Cadillac tax topic. This is what's being discussed and what's out there. It is very interesting. I do recommend you reading an article or two about it and, forming an opinion. If this was helpful, like my video, share it, come join me and subscribe on my channel at Kristen Talk Healthcare Edition on YouTube, and stay well.